All right, everybody. Thank you for coming to tonight's webinar. Appreciate having you here. We have a very special guest with a product that I'm very, very proud of personally. Appreciate you making the time to come this afternoon. Let's go ahead and get to the details. And the disclaimer, of course. This demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Thomson Reuters shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. I hope you have that as memorized as I do. As I was saying, we have a very special guest tonight, somebody that I've got a lot of personal respect for. We just finished a project that probably took us well over a year, probably into the 18-month mark to complete, called the JCPR. Greg, I don't know what I can say about him. He's a great guy. He's been a valuable business partner of us for as long as I've worked for the company. We certainly appreciate that. Manages money for Stadium Money Management. And certainly, when it comes right down to it, is probably one of the most thorough technicians that I know, and that definitely is represented well in the product that we developed with him. And it's been a pleasure working with him. I'm really glad that I got to be involved in the project of this JCPR add-on. So I'm going to go ahead and bring Greg on, and we're going to go ahead and let it take it from here.
Okay, thank you. And thanks to everybody that's attending. I can only say that the software works a lot better than this web thing. I would like to ask you to hold the questions until the end. By all means, you can certainly type them in there as we go through it, but we'll answer them all at the end. I think that's better for everybody. I got involved in candlestick analysis back in 1988. I was at a Market Technicians Association meeting at the Camelback Inn in Phoenix. A large contingent of Japanese investors and traders were there, market technicians, and they introduced Hayashi, which was their word for candlestick charting. I found it really fascinating. I went away from the meeting, and I was working with N Squared Computing back then. Norm North and myself, we used to compete with computer asset management, which was what Equus was called back in the early 80s. And we developed software to automatically identify Japanese candle patterns, and the software did really well. Irwin, the publisher, in about 90, called me one day and asked me if I would consider writing a book on Japanese candlesticks, and I said, you know, I don't really have time. He said it'd probably help sell a lot of software, so I said, well, send a contract. So that's how all that began. We're going to go through quite a few slides. The book on Japanese candlesticks, Candlestick Charting Explained, first came out in Candle Power back in 91. The Chinese came out with an edition of Candle Power shortly thereafter, and then there was a Polish edition. Then there was the second edition came out when McGraw-Hill took over Irwin at the time, so we came out with the second edition of Candlestick Charting Explained. The Chinese came out with a second edition also, and then quite a few years went by, and I was involved in money management and working with John Murphy, and so really didn't have a lot of time to do anything. But McGraw-Hill, I hate to say they used to call and beg me to do it, but they did plead quite a bit about writing a third edition. So I really poured my heart into this thing, updated all the statistics in the book, was able to correct a few little things that were not very clear. And so the third edition's been out since 2004, I think, or 2005. I just finished a Candlestick Charting Explained workbook, which is kind of an academic approach to candlesticks, and that will be out in the middle of December. And actually, in the a lot of the stuff that we have in the software is talked about in this workbook. So it would be a good companion. I get asked a lot of times how long I've used Metastock. Here's a hint. That's version 1 from 1985. I've been using Metastock for 27 years now, so great product. I've done quite a few add-ons with them. I did a breadth add-on years ago. I and one of the programmers basically did John Murphy's chart pattern recognition add-on back in 98 or 99. John provided all the oversight, but the actual coding was done by, I can't think of his name now, some guy there at Metastock and myself. So we're going to start with an introduction to candle pattern recognition. The first thing I want to talk about is pattern breakdown. It's a concept I introduced in the book, and basically if you had a 3-day candle pattern and you turn those 3 days into a single candlestick, the question you have to ask, does the single candlestick send the same message as the 3-day pattern does? And if the answer is yes, then the breakdown is fully supported by the single candlestick. Here's an example of an evening star pattern. Evening star is a bearish reversal pattern, and if you take those 3 days, you can combine them into a single candlestick, and that's the one on the right there, and they both are bearish patterns. So the evening star, the breakdown does conform with what the pattern does. This is a concept that is automatically dealt with in the JCPR scoring system. And I just said something you haven't heard anything about yet, but we'll get through all the JCPR scoring system here shortly. In fact, right now. In my book, I did a lot of statistical work. I was an engineer, so I always like to have things backed up by statistics. I created charts on all the candle patterns that look similar to this table that you see here. We'll go through what these components mean and what they are. First of all, we have a pattern name, and then to the right of the name is the 3-letter symbol and a plus sign, which tells us the abbreviation of that name, which is used in JCPR. A plus sign means it's bullish pattern. And then we have on the far right hand corner, we have an R plus, which means it's a reversal bullish pattern versus a continuation bullish pattern. And then we have trend required yes. Now, almost all candle patterns require a trend, and I'll talk about that a little later. However, there are a couple of them that work just fine in isolation, so we'll talk about those. Confirmation, yes or no. Basically, if the pattern, the statistics were very good on the pattern, I said confirmation isn't required. You can trade off of the pattern, but if that says no, like it does on this one, I would recommend that you get another day of data that moves in the direction that the pattern said it would before you would put in a trade. Then we talk about the frequency of the pattern. This is the mean days between patterns. In this particular one here, it's 590 days. You got to remember we're looking at almost 15 million days of data, so this is fairly frequent for a pattern like this to occur. And this was done on all common stocks on the New York, the Amex, and the NASDAQ exchange from 1991 on. Let me explain that. Prior to 1991, very few exchanges provided opening prices on stocks. Most of my original research on candlesticks prior to 91 was done on futures contracts because opening price is required in candlesticks. If you don't have openings, you're just playing a game. You've got to have open price. But since 1991, most exchanges provide opening price. This thing's not working, Jeff. Well, sorry about that. I don't know what's going on. There we go. It could have been operator error. Who knows? Anyway, my apologies for that. The statistics in the JCPR, a good candle pattern will have positive net profit loss uh, for the trading values over all the time frames. And basically, I tested the patterns from 1 to 7 days into the future. The better patterns will not only have better positive net profit to loss, but it'll also have smaller average losses. So it's those two things together that will give you an idea about how the statistics are used in JCPR. And this is also done automatically in the JCPR scoring. One of the other things we did is I'm a big believer in horizontal based support and resistance lines. Gosh, for 30 years I used to draw trend lines all over charts. Sometimes they'd work, sometimes they didn't. I think they're just too subjective to be used in trading. A lot of people like to play with their software and draw trend lines everywhere, but horizontal ones are price based. Horizontal trend lines are price based, which means people have a tendency to anchor. That's a behavioral heuristic. They anchor on prices. So we developed a automatic support and resistance calculator. In other words, in JCPR, it actually calculates support and resistance automatically for you. You don't even have to draw them in manually. Well, I have no idea why this isn't advanced. There we go. The reason we do is because when you see a candle pattern, a reversal candle pattern, when it's up against, for instance, these are all bearish reversal patterns here. When they're up and continuation, when they're up against a resistance line, like the horizontal line here in this chart, this is a very important area. And if you have a candle pattern that occurs, a bearish reversal pattern that occurs at a resistance level, you've just got that much going for you. A candle pattern is a psychological evolution of traders' mentality. But if it occurs when all other technicians are looking at support and resistance lines, it's just going to work that much better. So if you have a pattern that comes up and it starts bouncing off resistance, if it says that a confirmation is required or not, you might want to wait. If you're very aggressive, you can put the trade in early or maybe a partial position, but then wait till you get a confirmation move before you actually put in a trade. This is an example of horizontal support and resistance lines. The top is the S&P, the bottom is the NASDAQ, and I just drew them in there. But you can see that there's many times a support line will turn into a resistance line and vice versa. I always say that when you're drawing support and resistance lines, you should do it with a Crayola. Of course, that's because I started back before computers. But I also will draw little boxes. You see that back there in 2010 up to current, these little rectangles. Because support and resistance, this is not science. You're trying to identify areas of support and resistance. Here's a little shorter term view of the same chart, and you can see how the markets have bounced off support many times. You can see at the beginning of the chart back in April of what was that, 09, there was resistance, and it's resistance again today. So the other concept we have is called candle pattern filtering. I wanted to create some method that was that just made candle patterns work better. And so I came up with the concept of the filtering, and the one I like is stochastics %D. Now, stochastics %K is what I call the raw stochastic. %D is nothing more than a 3-day moving average of %K. So when you see a stochastics above 80, that is known as the filtering area. In other words, we know it's just a matter of time before %D drops below 80 and gives a sell signal based on that technical indicator. So why not look for bearish reversal patterns while %D is above 80? That way you'll get a psychological signal about a reversal long before a price-based signal will occur. And then the complement to that is when it's below 20, then you're looking for bullish reversal patterns. And again, this filtering is automatically incorporated into the JCPR scoring system. This is a picture of the pre-signal areas. Above 80 there, above the top blue line, whenever stochastics is up there, you're looking for bearish reversal patterns. And then when it's below the lower line, below 20, you're looking for bullish reversal patterns. I tried this with RSI, tried this with CCI, tried it with a bunch of different indicators, and you can certainly try anything you want. The percent D stochastics just seem to always give better results. So we'll talk about what's included in the add-on. There's the JCPR candle trend. That is an automatic trend calculation because, and I want to talk about this a minute. I see academics all the time, and in fact I see a lot of people using candle patterns in isolation. I'm sorry, you just can't do that. That's playing a game with yourself. If you have a reversal pattern, then it has to reverse something, correct? Why would you call it a reversal pattern? Well, it's reversing the previous trend. In other words, to have a reversal pattern, you have to be in a trend. To have a bearish reversal pattern, you have to be in an uptrend. To have a bullish reversal pattern, you have to be in a downtrend. The academics just look at the pattern identification and they leave out the trend, and they're sitting there finding evening star patterns in downtrends. Well, you might find 3 days that look like an evening star in a downtrend, but it's not an evening star. It's just 3 days that look like it. An evening star can only exist in an uptrend. So that's very important. In the early days, I used to use a 10-period exponential average, but we've got kind of an adaptive trend measure that is included in JCPR automatically. Plus, I insisted and got no problems from the Metastock guys on making this available in the indicator drop down so that you can use it with, if you have JCPR installed, you can use this candle trend by itself anywhere. The other thing that's included is the automatic support and resistance. We just talked about that. Again, that can be used. It's in your indicator drop down. You can use that on all your other analysis. You don't have to use it just with JCPR. And then the filtering binary. That's a filtering approach like I just talked about, but it's a little more involved. It uses a couple of stochastics and directional index. The explorations that are included, it automatically identifies reversal patterns. It will automatically give you a list of all the reversal patterns where the next day is also in the direction the pattern was calling for, kind of the more conservative approach. It'll also show you the filtered reversal patterns. In other words, the reversal patterns. The bullish patterns are when stochastics percent D is below 20. The bearish are when it's above 80. And then we'll do the same thing for the filtered reversal patterns for confirmed. In other words, it gives you another day of action that's in the direction the pattern is calling for. Like I said, that's a little more conservative, safer approach to using candle patterns. The expert is the JCPR, which contains all of this. So the templates, there's a clean chart template, and then there's a chart that contains all the filtering indicators, so you can see how each indicator in the filtering binary works. Let me just explain that in the support and resistance, in the template, the support lines will be green and the resistance lines will be red. But if you just use it by itself without using the template, you'll have the lines the same color as you have your default set in Metastock. I mean, if you have blue set for line colors, that's what they'll all show up as. So you might want to always think about loading the template, or you can color and create your own template. So the indicators that are included, the candle trend, support resistance, filtering binary. The candle trend, I just talked about it a little bit. It's used automatically. You can use it outside of JCPR. What it does, I use true range, and it's, this is an adaptive type indicator, adaptive type trend measure, and it works so much better than the 10-period exponential average that I used for the last 20 years. What that means is, as the volatility picks up, the trend measure kind of backs off a little bit, gives it some breathing room, and then as the volatility dampens, it tightens up. So it's an excellent trend measure, and like I said, you can use it outside of JCPR. There's an example of it, the little brown dotted lines below the price and above the price. That is That is the trend measure. Now it won't show up in JCPR like this unless you add it to your chart. The ribbon at the bottom is color-coded green and red to show the bullish and bearish trends. So when we're in a green area or a bullish area, the only thing we're looking for are bearish reversal patterns. We're not looking for bullish ones because they can't exist in a bullish uptrend, bullish reversal patterns. So the support and resistance is automatically drawn. In fact, it's a big part of the scoring system. It's defaulted 126 days. It looks back on daily data back 126 days to draw 4 lines of support and 4 lines of resistance. Depending on your data, it may use fewer lines, but you can go in and use this on your own charts for anything else you want, and you can look back further in time by just increasing that 126, or you can decrease it if you want to look at it real short-term times. There's an example of them, and here it is in JCPR. The trend ribbon is up at the top. You can see the patterns are color-coded. Red are bearish reversals, green are bullish reversals, and then there's no blue ones in here, but a blue one would be a continuation pattern. We identify a number of continuation patterns, but they're not part of any trading mechanism. So the filter binary contains 3 indicators. It's a 9-day %D, a 14-day %D, and directional movement. The 9-day is given 50% of the weight of the indicator, and the others have 25% each, and it ranges from plus 40 to minus 40. So we use the bullish pattern filter when it's below minus 20, use the bearish pattern filter when it's above 20. It's very simple, and when you see it visually, it's pretty obvious. That's the filtering indicator at the top there, and you can see that we've got a homing pigeon down at the bottom, which is a bullish reversal pattern, and we see that the binary up at the top is below minus 20, so that would be a filtered buy signal. Here's another example of it. The filtering binary at the top, the trend ribbon at the bottom, and you can see there's some blue candle patterns. Those are continuation. The green are the bullish, and the red are the bearish. And so the product does a pretty good job of identifying candle patterns. Something I've been doing for over 20 years. So working with the expert advisor, the obvious goal is to accurately identify the pattern. I mean, that is absolutely critical. You got to remember the Japanese doing this 200 years ago, and it was all visual. When you're telling a computer to identify a pattern, you have to decide what level of flexibility you want to use, because, for instance, a doji in Japanese means equal. And now that we have stock prices pegged in 1-cent moves, do we really want it to mean equal, or do we want it to mean close to equal? And if you think about it, looking at it visually, if you don't have a very high resolution monitor, a dot on a pixel on your screen might have actually a range of prices in it, but you can't see that because the computer, the pixel, will not break it down any further because of the resolution. So the other thing we do is we must identify the current trend of the market. Absolutely critical to candle pattern recognition and candle pattern success. I think that's the thing I see most people forgetting to do, that you've got to identify the trend first before you can identify the pattern. The next thing is to identify support and resistance levels on a short-term basis, because when patterns occur at support or resistance, they're going to be better patterns. The other thing we added in the expert is volume. Is the volume of the stock supporting the pattern? I don't know if you watch people talking about head and shoulders patterns, classic chart patterns. Many times they forget to talk about the volume. Volume has to react appropriately before a head and shoulders pattern is deemed to be a complete pattern. You can read Edwards and McGee and see all that. So we're looking at 3 different things in volume. We want to see the volume increase each day of the pattern. We want the highest volume on the last day. Obviously, if it's doing the first, it'll do the second. And then we want the volume to be above average. Then the thing we talked about the first was the breakdown. Is the pattern supported by its breakdown? If it does, then we give it points. If it doesn't, we take away points. Then are the historical statistics good or bad? And again, if they're good, we give this the the expert points for that pattern, and if not, there are no points. And then again, is the pattern filtered? Again, I'm trying to do everything I can to say to help this candle pattern along, other than just identifying it in the first place. So this is kind of how an expert looks. I think if you ever seen it, the window on the right can be attached there. I think it can be attached to the left, or it can be free floating. You can see the two indicators at the top that are part of the binary. The red and the blue lines are the 9 and 14-day stochastics, and then directional movement is the red and green lines right below that. You can see the support lines in the middle drawn there automatically. You can see the red bearish reversals. You can see a green bullish reversal. You can see some blue continuation patterns. And there's a little identifier above them with a plus or minus sign to help you know what they are. And then at the bottom, there's the ribbon for the trend, and at the bottom is also the volume with a moving average. So that's how the scoring system works, and we'll go through the components of that so you can see how that plays out. The support and resistance, we're looking at 4 lines of support, 4 lines of resistance, and we're measuring it percentage-wise. We've identified the support price. We've identified how far the pattern is from that support line, or how far it is from the resistance lines. Again, calculated automatically for you. You don't have to do a thing except look at it. The pattern filtering, we talked about that. 9-day stochastics is 20%. 14 and directional movement is 10%. And that works as a very good filtering measure. I want to talk about, I'm kind of inserting things here as I think of them. I get asked all the time, can I use this with intraday data? And by gosh, you sure can. It'll work on metastock and intraday data, but I'll tell you what, I don't recommend it. You can do candlestick charting intraday, but candle pattern analysis should be kept on a daily basis. That's how the Japanese did it. They were very big about the difference between the close of one day and the open of the next day. But if you're doing intraday, I mean, a lot of trading decisions are made when the market's closed. If you're doing intraday data, say a 30-minute bar, well, the close of that 30-minute bar, the next opening price is going to be the next tick. Could happen a half a second later. I mean, there's not a lot of trading decisions there. So the problem is a lot of candle patterns have gaps that make up the pattern, and you're probably not going to have too many of those if you're looking at intraday data. I don't recommend it. I don't recommend weekly data because the open is Monday's open, the close is Friday's close, and the high is the highest high of the week, and the low is the lowest low of the week. Well, all three of those could occur on Monday, and then the close would be on Friday. So you're eliminating the data when you're doing it weekly, which I just think it's bad practice. I've had people say, well, I do it and it works. I said, well, go for it. These are the pattern statistics that we talked about at the beginning. Again, the bottom line there, net profit loss per trade, and it shows you how it's calculated. When that's positive, like it is on this one, for all 7 days, and we're talking about 7 days into the future. In other words, the pattern occurs, and then the next day, that's where the 1 is. The second day is the 2. So you want to look for small numbers for percent losers and positive numbers for net profit, net loss. Again, JCPRs does all this for you automatically. And here's how it's broken down. The top 25% of all the statistics in both categories get 15 points. And then if it's in the bottom 25% in one or both categories, it gets nothing. So that's how the statistics are incorporated into the expert. Pattern volume, like I said, volume on the last day is greater than the 15-day average. That's worth 5 points. The volume increase on each day of the pattern, that's worth 5 points, or 5% here, same thing. We go to 100. And then the volume on the close, volume on the last day, is greater than the volume on the other days. This example shows a candle pattern whose volume falls in, so all three of those, in other words, the volume would give 15 points on this particular volume chart here. Pattern score. The pattern score, we use support and resistance lines. The maximum possible points is 25 points. And the score on this one is it's within only 1/10 of 1% of its support line. Well, what that really means is that the support line went through the pattern's body at some point. That's when you get the max possible. If the high-low range of the pattern goes through the support line, then you get 15 points. And if it's not that close to it, then you get 0 points. The filtering has a max score of 40 points. In this case, only 9-day %D and directional movement accounted, so it only had 30 points in this one. The statistics, the qualifier on the previous was F, so it got 0 points for the statistics. Only one of the volume measures contributed to this pattern, so it only had 5 points out of a total of 15. And then the breakdown was supportive, so it got 5 points there. So it basically had a 65% chance of success. And that percent chance of success is not a mathematical probability. That's just the sum of the total points from 0 to 100. So this is how the expert looks altogether. The name there at the top shows you the current close, tells you if the trend is bullish or bearish, shows you where the support and resistance lines are. It tells you that it's a morning star pattern, and there's the date that it was completed. And then it shows you all the scoring mechanisms, and then it totals. It says a 65% chance of success. The little click here, it'll give you a little page of additional information about the pattern. So trend determination, right there at the top, it's very hard to see on this screen, but it says the trend is bearish here. It's red, so the trend is bearish. You can look on the chart, you can see the red ribbon down there at the bottom is red, means you're in a downtrend. These are the support and resistance lines. You can see them on the chart. There's the actual prices over there on the expert that shows you where they were. This says it's an engulfing pattern. You can see down at the bottom there's a green pattern. It's always the last pattern that we're analyzing. And there's an E plus. E is for engulfing. The plus means it's a bullish reversal. And then this is the pattern scoring, which we just went through. There's a bigger picture. We just went through that. This is obviously different than what I just showed you. But you can see that the support went through the body, so it got 25 points. Only directional index was filtered, so it only got 10 points there. Only one volume component, so it only got 5. The statistics got 3 points, so the statistics were a little better than the worst ones, but not great. And then the breakdown was supportive. Then this shows that 48% chance of success. And then this, when you click on this HTML link, it takes you to something like this. For instance, here's the engulfing pattern, and it gives you a little commentary about the pattern, and it talks a lot about the flexibility that is allowed in identifying this pattern. You got to this comes after doing this for 20 years. You've got to have some flexibility. You can't just be rigid about this, or the computer will never spit out any patterns. Obviously, if you're going to set it too loose, then it's going to see patterns everywhere. So we've got a nice happy medium here in the JCPR product. I'm very happy with the patterns that it is identifying automatically. The trend ribbon is down at the bottom. We've talked about that. And then the identification of each pattern is done on the screen. I apologize for the resolution here. You just can't see those, but there's a little 1, 2, or 3 letters with a plus or minus sign to help you identify each pattern. In the manual, there's a page that shows all that. I'd suggest just print it out and keep it by your computer until you get used to it. So this is kind of a updated chart. Shows a homing pigeon pattern, and then you can see the other patterns that are there with the filtering binary at the top, support and resistance lines, the trend ribbon, and the volume. So the expirations identify reversal patterns that are confirmed, filtered reversal patterns, and filtered reversal patterns that are confirmed. Probably a great way to go through this, instead of just scrolling through the data, which you can do, is run an expiration, save the results into your favorites, and then scroll through those, and you can see every pattern in your database. And some days there might not be any. Some days there might be more than you want to see. And then you might want to start with the reversal patterns confirmed, and then look at the reversal patterns that are filtered. In other words, help narrow the list down to see if there's a trade that you want to make. So in summary, it's the automatic identification of real Japanese candle patterns. These are the ones that I got out of the Japanese literature when I was in Japan in the 1990 and 91. There's a lot of patterns out there in the marketplace that are not real Japanese patterns. Personally, I actually made up 4 patterns myself along with Norm North. We created what's called 3 inside up and down, 3 outside up and down. Well, they're not Japanese patterns. They're something I created. And we did that to turn the harami and the engulfing pattern and make them a little better. In other words, it just added a day of confirmation. I always find it interesting to see those in all the other candlestick books. So the trend determination is automatic. The support and resistance measures are automatic, and you see the little red asterisk there. That means that you can use those outside. Once you've got JCPR loaded, those are in your indicator file, and you can use them anywhere. Then we have all these other tools that are there to aid in making the pattern more successful. The filtering, the volume, the breakdown, the statistics. Let's see. Oh, I didn't. Dennis Peterson just reviewed the product in Stocks and Commodities magazine. It was a very positive review. I was very happy about it. He said you'll be struck by my thoroughness, and you'll consider the elements of the plug-in. You'll see something as wealth of experience and talent. Plug-in is now on my list of heavy hitters. Don't leave home without it. I think Equus or Metastock probably has that review somewhere. So that completes the presentation. Let's see, Jeff, do you want to kind of lead the discussion on questions, and then I'll try to answer them? Hey, Jeff, are you on? Well, I can see the questions. I'll just start with them that are coming at the bottom. Can we change these weightings? No, you cannot.
Okay. Hi. I was having a bit of a technology problem, Greg. Am I coming through too loud?
Yeah, you're kind of warbly, but we can hear you.
Okay, good. I've actually been answering a lot of the questions that came in by chat. Let's go ahead and open it up for questions. If you guys have things you'd like to ask Greg while we're opening things up, go ahead and type them in. A few things that I'd like to add. Greg, you did a great job of reading the review parts. If you guys want a copy of that review, send me an email. Most of you have my email address, but I'm going to type it in here as well. You guys are more than welcome to contact me about any questions you have about the add-on as well. We were very, very happy to get such a positive review from Dennis. The review itself was probably about 3 or 4 pages long and goes into a lot of the detail about what's included in the add-on, but it was really, really good to see, how enthusiastic he was, particularly around the scoring methods and that kind of stuff. Brad asked,
okay,
how do you define...
Jeff, will this presentation be...
Yes, and as long as we've had a couple of problems with Adobe, but we think we've got them all resolved. And this recording should be showing up on YouTube in a day or two. Greg, how do you define the start and stop time of a day and stop?
Well, I only use the exchange open and close times. I don't use the pre-market data or the after the market data. You got to, if we ever go to 24-hour trading, you're going to have to decide when your trading day begins and ends. Fortunately, a candle pattern, you can change. The whole candle pattern will change if we ever go to 24-hour trading. Personally, I don't think we will. So I just use exchange open and close times. That's where my data is downloaded as, and that's what I use. So the statistics, I look at the statistics periodically. I know in managing money, every quarter I go through all of our trend measures and make sure they're still doing what we want them to do. the statistics it was surprising. The statistics when I did this in 2005 did not change very much from when I did them 15 years prior to that, with considerably less data. Commodities, yeah, I would think so. Pit hours for commodities, you know, those are just decisions you'll have to make. I would say that whatever method you choose, do it consistently. Don't go changing methods, I think it would just add confusion. Remember, this is an art form. This is not science. Yes, I get Reuters data. I have access to Bloomberg data, but I use Reuters data link for all of my data. No, when I download the daily data, it is exchange hours. You'd have to ask Thomson Reuters about that. I don't know.
Yeah.
I think the message is that you, whatever you do or however you use it consistently.
Okay, great. Well, it looks like
Midnight.
that kind.
Exchange hours work all over the world. Midnight to midnight changes 26 times, depending where you live. Yeah, and, you know, and the other thing that I think there's, I see in other books, you got to remember that the Japanese, when they created these patterns, I've got 7 other books translated, and they really talked in pretty vague terminology about these patterns. They had little pictures of most of them, and that was it. There was nothing else, and I think I probably kind of set the standard in the industry for the limits on what these patterns can be. First of all, if you say one bar has to engulf another, like an engulfing pattern, the second day completely engulfs the body of the first day. Well, does engulfing, could that literally mean that if it just has one tick at one end of the body outside, that would be engulfing, wouldn't it? I require that it has to engulf at both ends of the body, and like on equal. First of all, they talk about long days and short days. That's another issue. What's a long day? Well, first of all, we're talking only about bodies, and so I've defined it so that a long day is determined by how long that body is relative to the previous 5 days. Because a long day over time might not be a long day a year later. It all depends on what the previous 5 days were doing to determine if today's body was a long body. So you got to remember, this is an art form.
Okay, guys. Well, Greg, thank you for coming tonight.
Any other questions? Thanks, Bob. My pleasure. In fact, thank you to all of you. I enjoy doing this. Okay, Jeff, are we going to shut her down? It doesn't look like there's any more questions, and it's almost happy hour on the East Coast.
Well, awesome. Well, Greg, thanks a lot. I appreciate having you in here. It was a good overview of the Japanese candle pattern recognition. Let me know if you guys have any questions. I really appreciate you guys coming in. And Greg, thanks for your time. And we'll see you at the next webinar.